Hey, what's going on, friends? This is Gary. What if I told you that the TikTok CEO, ex-Disney Plus chairman, LeBron's James, Shaq, Arnold, as well as Spotify, they're all backing up a single company? Is it too good to be true? Well, no. They're all backing up that particular company, and this company is called the Beachbody Company. It is now trading as FRX, but when the market opens on 28th of June, it is gonna change to BODY. BODY. And this is not just a random typical SPAC company. It is a company that has three companies merged together as one to form a huge mega fitness hub. So the Beachbody OpenFit, as you can see from the picture, it is pretty much the same function where it has video content, it has nutrition, food, meal preps, and everything. And these two companies, it has different target audience, and now they are merging one together to carve out a bigger pie for themselves. So then after that, in between, they have this MyX Fitness. Essentially, this company sells fitness gears, fitness equipment. So this merger actually makes sense because you do fitness, you watch those fitness video, you need to buy fitness equipment. So it is a holistic company, a mega hub for fitness in short. So today we are going to talk about a brief rundown on what the company does, the numbers, the chart, the short squeeze potential, and end off with my personal opinion. So just now we talk about these three companies merged together and how they earn money, what the company does. So the Beachbody Company sits at the center of three mega trends. So what are the three mega trends? The first one is digital subscription, connected fitness, growth, consumer health, and wellness. So for digital subscription, it is similar to Disney, Spotify, Netflix, YouTube Premium. It has high value in monetization of content, delivering higher engagement and subscriber growth, recurring revenue with ability to scale globally. And next, connected fitness, basically it benefits from structural shift from consumers spending more time at home, integrated hardware and content, passionate loyal community. And growth, consumer health and wellness, clearly in focus on heels of pandemic, consumers and investors, dollars continue to flow in. Long tail for sustainable growth. So this is how the company functions with these three pillars. So the first pillar would be digital subscription. So for digital subscription, they have a lot of video content similar to YouTube that you guys are watching right now. A lot of video content, but over here it is premium fitness videos for people who want to keep fit, from Beachbody on demand as well as OpenFit. So they have close to more than 2,000 videos for us to pick and choose. And now the next thing would be they have a community like groups, and of course the first thing first is individual customers. Mainly they want to drive sales through word of mouth marketing and real results, social commerce, BOD group, macro influencers. You guys want to pause and read this through, you guys by all means. Next, we talk about OpenFit is built on Beachbody's core competencies to attract new mass market audiences. So OpenFit, it has live and on-demand content starring fitness celebrities and influencers to drive engagement. So as you can see, these influencers and celebrities, LeBron James and so on and so forth, all this, just imagine all of them. Right? There are more, but just imagine this group of people, they decided to promote the Beachbody Company. They decided to promote, and what's going to happen? 73 million followers, let's take half. All right, 21 million followers, let's take half, or 1/3. There will be, the subscription rate will increase exponentially if they start to promote, right? Next, then we have live classes, live running, live walking, and this to attract people to subscribe. Now let's take a look at some numbers for digital subscription. So for digital subscription, we are looking at this. Okay, I'm going to break it down. I'm going to zoom in. So we're going to zoom in this part. Right now in 2021, the estimated revenue is 450 million plus. 450 million plus in 2021. And next, we're gonna take a look at the key metric: digital subscription retention month over month, which is 96%. That's insane. Okay, imagine you subscribe, 96% of the people still continue to subscribe. Only 4% of people leave, and on top of this 96% of people who continue to subscribe and continue to pay the subscription fee, more people will come every single month. So the growth is there, right? It will snowball into a lot of members. So right now it has 180 million streamed views. Next, we take a look at this part: paid digital subscription. In terms of the paid digital subscription, it has skyrocketed in 2020, partly because of COVID-19. But even if it is not due to COVID-19, as you can see, 2015, 16, 17, 18, I'm going to zoom it in for everyone. So 15, 16, 17, 18, 19, it has gone up quite a fair bit exponentially. And with COVID-19, it has spiked up quite substantially in terms of the paid digital subscription. Now, the second part we're going to take a look at is the connected fitness, about MyX Fitness. Okay, it is an exciting connected fitness experience, holistic on and off bike fitness solution, lower cost than competitors. $29 per month subscription, 360-degree screen tablet, heart rate based training approach, commercial grade equipment. So it basically, MyX Fitness, it leverages on Beachbody's distribution, marketing experience, and content creation capabilities. I'd like to highlight MyX Fitness in terms of their Instagram followers, in terms of their marketing content. They are not as strong as compared to Beachbody. So now they merge. MyX Fitness will be able to leverage on their distribution, marketing experience, and content creation capabilities. And this means MyX Fitness, the bike that they sell, and as well as the equipments that they sell, will definitely, in terms of the sales, will definitely skyrocket once this merger happen and more people have access to this. Alright, now let's take a look at the numbers. Right off the bat, as you can see, MyX Fitness, it has 100 million in terms of revenue in 2021, an estimated value. So, FeedRated.com said, if you are an elite spin class assassin looking to climb to the top of your competitive pool, Peloton is still the king, and they are going to make you pay for it. For the 80% or more out there that just want a good workout, some extra guidance, and the convenience of occasional spin classes for the comfort of our own home, MyX Fitness bike is half the price of Peloton for way more than half the bike and experience quality. Save some bucks and ride with MyX. I'd like to bring your attention to the next point, which is this part. The subscription margin is 89%, meaning for every $10 of subscription fee, the company takes $8.90, which is high. Next, the thing is, the retention rate is high as well, 98% month over month. So the revenue they earn and it retain 98%. And on top of this 98%, more people pile in as well. So that's why you see the numbers looks ridiculous. Middle of the year has sold 27,000 bikes. So imagine this merger occur. People in Beachbody, people in OpenFit decided to watch videos, decided to buy equipment, and they can buy equipment from MyX Fitness. So can you imagine MyX Fitness in terms of the bike sold, in terms of the equipment, the revenue? It will increase substantially in the coming years. So third, let's take a look at the growth, consumer health and wellness. So consumer wealth and healthness, they have protein shakes, they have healthy stuff. All right, they sell healthy stuff, and they do have meal preps for people. So this part of the business, it has earned them quite a fair bit. So the subscription rate, the digital subscriptions as we looked at just now, it is 450 million, right? 2021 estimated revenue. But you take a look at this nutrition subscriptions and other sales, it is 560 million in 2021 estimated revenue. So it is quite insane for their nutrition, their meal preps, their sales and food subscription. It is quite high. right? Significantly higher than MyX Fitness as of now. So let's just recap: fitness equipment, fitness content, live and on-demand content, healthy food, fitness tracker, fitness community. So it is a mega hub for fitness. Let's take a look at the leadership team. I'm not going to go through one by one, but as you can see, each of them have their own experiences in different companies. With their experiences, they will be able to bring the company to greater height. Now, let's take a look at the financial. For the financial, as you can see, in 2021 estimated sales revenue, the red color, which is nutritional products, is 560 million, and the blue, which is digital subscription, is 456. Makes sense? 456, 560. So makes sense. And the gray color is connected fitness, which is almost 100 million from MyX, and will only grow over the years. So a lot of people say, wow, this projection is really crazy. But is it crazy though? Because you take a look, the digital subscription, the gross margin is 89%, and the digital subscription retention as of now, month over month, is 96%. So a lot of people still pay for subscription. So for example, you have Netflix, you continuously pay, you don't exit. So same thing, a lot of people don't exit, and the gross margin is high. And you take a look at MyX Fitness, the subscription margin is high, retention month over month is high as well. And more importantly, the health, wellness and fitness industry is undergoing a fundamental transition. Okay, Beachbody will continue to capture billions of dollars in revenue because the health and wellness industry has a market share of $1.5 trillion. Okay, so Beachbody has been consistently expanding its market share in the $1.5 trillion health and wellness industry. Now, 72% of Americans are overweight or obese. 10 billion of annual consumers spending is expected to leave the gym sector as customers shift at home options. Digital at home fitness spend has surged 30 to 40% post-COVID. 87% of people who feel comfortable returning to gym will keep at home workout as a part of their fitness routine. The online fitness market is expected to grow from 6 billion in 2019 to 59 billion in 2027. So with this information, these projections is not crazy at all. Okay, the fact that this year it has grown, and once the merger completed, which is it happens on 28th of June, officially changed the ticker symbol to BODY, I expect the revenue to grow as expected, right? So let's take a look at the chart. Now, this is a chart that we're looking at. As I mentioned to you just now, right now it is trading as FRX, but when 28th of June, when market opens, it will gonna change to BODY. So do take note. Right now, as you can see, the highest was $18. Then it went back down. This period was the point where they announced that, oh, they're gonna do a merger. They're gonna do a merger with a SPAC company, and therefore the price went up. And this was the period of time when SPAC companies, CCIV, and different companies start to fly. But then afterwards, it start to got shorted down all the way. And ever since it's shorted down to $10, it has been hovering around $10. There was a spike, and I believe this was the day where Clover and all the other stocks start to fly. Okay, a lot of bullish sentiment, and therefore I think this one's fly as well. And very quickly it start to drop back down. So right now we were trading at $10, okay, for a couple of days, and then because of good news on Thursday and Friday, the price went to $12. Okay, so now if you're short-term buyer, okay, you're not gonna hold it for long, I'll ask you to wait for the dip. Why I say short term, you guys need to wait for the dip, because right now we are at the overbought territory right now. Okay, 82. But then again, as what we discussed earlier, this company has potential to go to 2x, even 3x, even 5x. That's what I believe, because of what we discussed and the growth this company potentially has. Furthermore, on top of that, let's take a look at this short volume ratio, which is 32%. It is quite heavily shorted for SPAC, and with good news, good momentum, then short sellers might want to cover the position, and it could cause a short squeeze. I wouldn't say a massive short squeeze, but I would say a $20 or $30 is pretty much possible if it have a short squeeze. Or alternatively, it might cause a gamma squeeze, because a lot of time we were trading at $10, so the calls won't be so ridiculous, right? Now, if the price start to pick up above $18, $20, it could go up all the way to $30. So that's my personal opinion on a gamma squeeze. If you guys are not sure what's gamma squeeze or short squeeze, you guys can check my videos. Yeah, that's it for the chart. And for my personal opinion, I do feel that this company has is a long-term hold, where in 5 years time, I do believe that your investment right now can potentially 2x in, say, 2-3 years. But if you want to just trade, then you just got to be careful, because it is a SPAC after all. I hope you guys enjoy this due diligence, this research, and I'll see you guys in the next video. Bye bye.